the property guru fiction. I just got an email today from a property company. They're based in Brisbane, and they were telling me in their EDM, in their email newsletter, why it's such a great idea to buy in Brisbane. In this video, I'll be going through their points and disarming them, completely negating them, so that you can understand that when you involve yourself in guru fiction, putting up experts and properties on a pedestal, including me, that is a recipe for disaster. You absorb content, believe it's true because it's in an email, it's in a YouTube video, it's in a podcast, and it's an article, it's in a Smart Property Investment Show. You believe it's true, you outsource your money to a buyer's agent, and you get bad results. Here are 10 arguments of theirs in their email list why they said you should buy in Brisbane, and my counters. All right, let's go. Smash the subscribe button, give it a thumbs up. This is pretty fun to do. I'm in flow. This is fun. Okay, so the first point I want to make before I just go to that, right, is that if you're looking to buy a property and you're looking to hire a property company, buyer's agent, or whatever, for some reason you do that, don't go with someone who specializes in a particular area, because just like this company, they only operate in Brisbane. And so even if it's not an idea to buy in Brisbane, they'll always big up Brisbane, because if no one's buying in Brisbane or no one's utilizing their services, they're not going to make any money. So you need someone to be objective and not biased to a particular geography. That's true, superior, borderless investing. Okay, so the number one reason they give why you should buy in Brisbane right now is that house prices in Brisbane have increased by an average of 9.7% per annum in Brisbane for the last 46 years. All right, so that on the surface, if you're like a new property investor, you're like, oh wow, Brisbane has done really well in the past. That means it's probably going to do really well in the future. Wrong. Okay, just because something has done well in the past doesn't mean it's going to do well in the future. All those like disclaimers, like past performance doesn't, guarantee future performance, but also like this random number of the last 46 years. If you pick 26 years or the last 86 years or the last 50 years, this annual compounding growth percentage is completely different. So data can be manipulated, and you shouldn't just go by that. Really, really important that you understand that. Number two, they're saying that between 1997 and 2003, house prices in Sydney increased by 97% off the back of the year 2000 Olympic Games. Obviously, the logic is, well, the Olympic Games are going to happen in Brisbane, and so Brisbane's going to have similar growth story. Well, wrong. Okay, the number one reason, or A, why it's wrong is actually all of Australia grew at that time. It's not that Sydney itself grew, everything in Australia grew. So it wasn't the Olympic Games that drove that. And in fact, you could say that Sydney underperformed because Melbourne in that time period grew more than Sydney. Okay, that's my first point. And the second point is that, okay, well, you're saying 3 years before and 3 years after the Olympic Games, Sydney grew a lot. No one can doubt that. Relatively not so great, but absolute level, yes. We're still like 7 years away from being 3 years before the Olympics, right? So like, why would you invest in Brisbane now if that was your sole rationale? So do you know what I'm saying? Like, you can see these bullet points and infographics, and it's all data and it's statistical and it's all very fancy, and you can fall for it. And it's like, hey guys, take my $12,000, buy me a property in Brisbane. It's like, why buy in Brisbane when everything has already grown like 60, 70%? I can tell you, we're not really buying anywhere at all in Brisbane, except for a few deals here and there where they're really good, but freestanding houses right now in Brisbane, it's not really the place to be. Okay, number three reason, they're saying the Australian Financial Review recently published an article forecasting house prices could potentially double in Brisbane between 2021 and 2032 Olympic Games. They're saying, well, the Australian Financial Review is saying that. Well, the Australian Financial Review also predicted that house prices would fall 20% 2 years ago in the middle of COVID. The Australian Financial Review also have predicted a whole bunch of wrong things. So just because something is quoted in the Australian Financial Review, that doesn't mean it's got any statistical substance. In fact, you take 5 different media outlets, they're saying 5 different things. Mostly all wrong. So once again, like, that's not a real reason to plonk down $600,000-$700,000 of your hard-earned money and buy in Brisbane. All right. Number 4, Westpac has forecast the 2032 Olympic Games could produce at least $17 billion of economic benefits for Australia. I was like, okay, well, that's great, but just because there's economic benefits, that doesn't mean that property prices go up, just like the Commonwealth Games. Relatively speaking, for little old Gold Coast, Commonwealth Games are a big deal, right? And they also provided, I would say on a relative basis, disproportionately more economic benefit than what they're suggesting here. But Gold Coast house prices didn't really do much at all before or even after, 1 or 2 years after the Commonwealth Games in 2017. So once again, sounds good on the surface, sounds good on the face of it. And if you're new to property investing, you're absorbing content, you're like, yeah, chuck that in a WhatsApp group, share it with my friend, tell my colleagues. And it's just like this self-fulfilling prophecy, this cognitive bias. Everyone's saying the same thing. Say, yeah, Brisbane. But, there's no facts. Number 5 reason they're saying to invest in Brisbane. And by the way, I live in Brisbane right now. I'm about to move, but I have nothing against Brisbane. I'm just trying to illustrate the fallacy in just absorbing content mindlessly and outsourcing your financial future. Number 5 argument is that Brisbane's population is predicted to soar over 5 million people in the next 25 years, according to the Australian Bureau of Statistics. Well, if the Australian Bureau of Statistics is saying that, then we better invest in Brisbane, right? No. I mean, first of all, we don't invest based on what's happening 25 years from now. We need growth. We need some outcomes right now, like in the next 6 months, the next 2 years, the next 3 years. Can't wait for 25 years. The next thing is that population growth itself over the short term or long term in of itself doesn't predict capital growth. There are areas around Australia where population growth hasn't occurred and property prices have gone up. There's areas around Australia where property prices have fallen and population has gone up. If you actually trace these things, a clear example, I know it's an anomaly, but Melbourne property prices, haven't they gone up in the last 2 years? Melbourne's population has declined, right? So there's not, it seems that, population growth must lead to house price rises, but that's not necessarily how it works. In fact, sometimes, population growth figures are coming out of councils, and that means that they're releasing more and more land. When they release more and more land, more building, more permits, more houses come in, and you need more houses to accommodate the new population, and that means supplies increase, demand's increased, prices are stable. Property prices increase where demand goes up, but supply stays the same. And so you can see in let's say, inner ring suburb, pick a city, inner ring suburb like Ferny Hills, let's say in Brisbane, you can't build more there. It's like landlocked, there's no spare land. It's not like population is rising in that suburb, but prices will, because demand is, okay? So it's like house prices will go up because demand is rising for Ferny Hills. You can't build more, therefore there's no additional population. Where are they going to go, right? It's not like all of a sudden there's going to be 10 people living in each house, but prices are rising. So this kind of breaks apart this, axiom that population rises lead to house price rises. This is a statistical fact. Number 6 point that they're making is that Brisbane is chronically undersupplied from a rental perspective. Vacancy rates are now at record lows in Brisbane, according to SQM. That's actually true, but why is it still misleading? It's still misleading because vacancy rates are at a record low across the entire nation. And in fact, on a relative basis, you could say that other capital cities like Perth, like Adelaide, they have a tighter vacancy rate by and large than even Brisbane, and in regionals even more so. So once again, when you're making property investment decisions, you need to be comparing things. You can't just say this apple looks good. It's like, well, try to find a bigger, juicier apple. If you can find a bigger, juicier apple, go for that one, even though this one looked fine. It's your hard-earned money you're investing, so try to find the best alternative. You can't just create an insight based on one data point. You need to understand trends. Number 7 point that they're making, they're saying between 2021 and 2022, more Australians moved to southeast Queensland than Sydney or Melbourne. Once again, that's true, but it's already happened. Like, we can't make future-looking decisions based on old data. We need to preempt this stuff. And in fact, it's probably going to go the opposite way going forward. It's, COVID has had its effect. It's probably unlikely that people will continue moving out of Sydney and Melbourne to the same degree that they have in the past, so that migrational flow, that migration north has already happened, is now already baked into, already priced into Brisbane property. So the point of this video is not to lambast and criticize everyone, but really to say, buyer beware. Try to understand who's selling you the content, what's in the content, and whether it's reliable. Just because it reads well, just because it has numbers in it, just because it seems like it's knowledgeable more than what you currently know, that doesn't mean that it's right. That doesn't mean that that person knows what they're talking about. And that doesn't mean that they can actually get you the result that you want. When you're looking for a provider, always check if they have these three things, 3 C's: care, competence, and character. Sometimes they imagine really nice people, like they genuinely want to help you. They're really caring about you. But if they don't have competence, if they actually don't know what they're talking about, a bit like, in this instance, then, you can't give your hard-earned money for them. Sometimes they're really competent at what they do. They're all over the numbers, but their business is just so big. They don't really care about you. You're just a statistic. And sometimes, they're really competent. They're really, they do care about you, but their character has shown that, in the past, they've, done shortcuts, they've taken the wrong turns, they've let clients down. They're in it with the right heart. They're good at what they do, but the character sometimes is lacking on and off the pitch. You need to vibe with who you go with. It's not all just about property. And when you understand someone holistically, then you can build your confidence to say, yeah, look, I've saved up $50,000, $100,000. I'm going to buy a $300,000, $400,000, $500,000, $600,000 property. Like, I can really trust this person. But I always say, the most valuable real estate is the 6 inches between your 2 ears. That is what you should be enriching with confidence, with knowledge, and with experience. And you can do so by so much free content, but try to separate the garbage from the facts. And that takes a little bit of discernment, a little bit of intelligence, and a little bit of time. But you owe it to yourself to do that. All right, guys. And if you do want to do that, for what it's worth, subscribe, give this video a thumbs up. I'll leave links below to my podcast on Google and Apple Podcasts and Spotify, and also the Facebook group where exactly these types of people, more than 20,000 people who are questioning everything, really not just taking, opinions as facts. That is where you can fast track your learning and really decide, can I do this myself, or do I need some mentorship, or do I need to outsource it? But always start with doing it yourself. Don't pay me, don't pay anyone. Then if you need a bit of help, that's where you go from there. All right, my name's PK. Catch you later, guys. Bye.